Hello everyone, we're back to chapter 3, part 2. As we promised, starting in with Social Security. So the question then comes up, is Social Security included in income? Social Security benefits received from the government? And the answer is maybe, depends. Alright, so that's why on the 1040 there is a column for total benefits and a column called taxable benefits. So you put the total benefits in there and you put the amount that is taxable, because in some cases the taxable amount might be zero. Other cases it may be as much as 85%. The maximum it could be is 85% of the total benefits. All right? But how much it is depends on the following calculation. So you have to calculate provisional income. So if you have a tax return that is dealing with Social Security, first thing to figure out is the provisional income to see how much of the Social Security benefits are taxable. So to get the amount that is taxable for Social Security, you start with adjusted gross income. All right? And then you add, without including the Social Security benefits, then you add tax-exempt interest. Remember, tax-exempt interest is left off the tax return, not part of AGI, the adjusted gross income. So this is one of the reasons why on the 1040, even though it's not included in income, you put the tax-exempt interest so that it is easily seen, this calculation. That's the most common one. And then you add in 50% of your Social Security benefits. That's your provisional income. Now, the other items that are listed here on the slide is also important, but having done this for a while, the ones that come up the most of the time when you're calculating provisional income is tax-exempt interest. All right, and then, of course, the 50% of Social Security benefits, because obviously that applies, or you wouldn't be doing this. The others come up once in a while. If you are over the threshold, the first threshold, then the amount of your Social Security that is taxable is either 50% of the Social Security benefits or 50% of how much your provisional income exceeds the threshold. Whichever is lower. So you get the benefit of it's always the lower of those two. So typically that means 50% of the amount over the threshold. But if you go past the second threshold, then you could be as much as 85% or 85% of the amount over the threshold, whichever is less. Okay, so what's those thresholds? They're not very high. For married filing jointly, the first threshold, 32, second threshold, 44. So if you're over 32 in provisional income, then as much as 50% of your Social Security benefits could be taxable, or the amount that you're over $32,000. Okay? Once you hit 44, that's $12,000, okay, then you're looking at 85% of over that, okay, as your minimum. So if your income is in 80 or 70 or $80,000, it's just 85%. If your income is below 32,000 provisional income, zero, right? Single head of household, qualifying widower, all of them are lumped together. They have a second. So we only have two sets of thresholds. And notice that it's not that much lower, but it's still lower, 25 and 34. And there's a $9,000 difference there. So you've got up to 25, 0, between 25 and 34 could have as 50% or 4,500 of that in between. And then over that is 85%, roughly how it works out. All right. So, an example. File return as a qualifying widower, so we use that second set of thresholds. Receive $7,000, $19,000 of interest income, $5,000 non-taxable bond interest. Provisional income is 19 plus 5 plus half of the Social Security benefits, $3,500 or $27,500. Reported taxable security benefits lesser of 50% of Social Security benefits, that would be $3,500, or the amount we're over the threshold. Well, $27,500 is over the first threshold by $2,500. Half of that is $1,250. $1,250 is less than $3,500 or 50% of the Social Security benefits. So their taxable benefits is only $1,250. Other types of taxable income. Jury duty. Not a lot of money. And sometimes you may give that to your employer because your employer continued to pay you, okay, during your jury duty. So if the employer says, all right, we won't count that, we'll pay you just like it was a vacation or sick day while you're on jury duty, then they may say, but we'd like you to forward the amount of money that you got for going to jury duty back to us as kind of reimbursement. It's usually like $20 a day or $10 a day. It's very small, so it's not like it's much to worry about. Prizes and awards are taxable income, typically. All right? If you get forgiveness of debt, unless there's an exception, it is included in income. And if you get paid out for your total car more than it is adjusted basis, then it could be income. Or more than what you paid for your house burned down, you could have income. Terrible thing, but it could be considered income. Now, some things that are excluded specifically in the law. Remember, it has to be excluded in the law for you to leave it off. So some things that happen specifically at work. Typically there are what we call fringe benefits that an employer provides for employees that aren't going to be considered compensation, aren't going to be part of the wages, aren't going to be included on your W-2. First, usually, most of these have to follow non-discrimination rules, meaning they can't provide them for certain employees and not for others. They have to be available for everyone, at least on the same basis. So you can't just provide for the president and not for everybody else or something like that. So one of them is no additional cost services provided to employee. So airline employees get to fly, okay, standby. That is a economic benefit. They get to go places and don't have to pay for it, or they only have to pay the sales tax on it. That is a benefit, but it's considered non-taxable because it didn't cost the airline any more to put you on the plane than if they didn't put you on the plane. Okay, so that was the key thing to exclude it. It can't cost them any more money, and it has to be their regular. So an airline can't provide you with free hotel rooms. That would be income. Airline can provide you with flights. All right. Discounts on products, but they have some limits. Okay, can't be more than the gross profit percentage. You can't give them a price lower than your cost, basically, as the employer. And the maximum discount for services is 20% of the normal selling price. So you can offer discounts. I know a lot of clothing stores and stuff. That's a big perk for the employees. They like to get a discount on stuff, and that you can do. And you don't have to count that as additional income to that employee. The employee doesn't have that as income on their tax return. Qualified transportation benefits, for instance, bus passes and things up to a certain amount you can provide. Other, ability to get places. De minimis benefits like turkeys, picnics, that sort of thing. Copy machine use. They let you make copies that you would normally have to run down to Staples and pay for. Technically, that's a benefit. And we've said that's just too small to matter. The IRS and government said, okay, yeah, at some point it's de minimis. That means too small to matter, and therefore we're not going to make you keep track of all those copies. Cell phones and the employer providing you with a cell phone for work that you can also use outside of work because there's no way to really police that has become a de minimis benefit, and it is not income to you, even though you get a phone for it without paying for it. Some other fringe benefits have limits, meaning that you can do it up to a certain amount. Life insurance, perfect example. My employer can provide me with life insurance up to $50,000. They pay the premium. It has to be a group life insurance policy for all of the employees. It has to be non-discrimination. If you provide that for me, even though that's a benefit to me, I don't have to count it as income. Now, if it's for more than $50,000, then the amount over $50,000 is income. Educational assistance, $5,250 can be paid towards education, regardless if it covers anything to do with work. So if my employer says, you go take a college class and whatever you want, and I will reimburse you for your tuition, okay, that is not income up to $5,250. For 2020, they are allowed to pay off $5,250 of your student loans, same way as we do the educational assistance. So that has been expanded to include payoff of earlier student loans. Dependent care assistance, okay? You could provide money for them to pay for child care assistance. So you submit a bill, they pay that sort of thing, you up to $5,000. If you have a plan, if it covers all employees. Other things may have certain requirements, whether they are included or not included. Scholarships and fellowships. You must be a degree-seeking student. You cannot just be piddling around with different classes for a scholarship to be. Usually you're not going to get a scholarship unless you're serious. It has to be covering tuition and things. It starts to go into living expenses for certain fellowships, and it becomes income. Withdrawals from certain qualified tuition programs. These are savings programs for people to save for college. When you pull the money out to pay for college things, that is not income. Life insurance. Grandma dies. She has life insurance on her life. All right. When that pays out, that is not income. If you leave it with the insurance company and pull it out a little bit at a time, therefore they're paying you life insurance plus interest, then the interest would be income, but not the life insurance part. And so we would have to divide each payment into the amount for life insurance and the amount for interest. Gifts we mentioned earlier are not income. Inheritances are not income. You inherit from grandma when she passes away, she leaves you the house. That is not income to you when you take over the house. Compensation for sickness or injury. Now, you have to be a little careful when you get paid out because you got hurt. Now, you've all seen a commercial about Aflac, which the doc talks about paying for bills. Aflac is generally paid out based on days missed of work. So it's a certain amount per day you miss. If that's the case, that is income. But if they pay you $20,000 if your thumb gets cut off at work, that's based on the injury, not how many days you missed, not how any of that, how much the bills are, but the particular item that you lost, called dismemberment, kind of a term, and not such a fun term, but that it is not income. Child support is not. Alimony can be. The law changed a little bit on that We'll talk a little bit more about that later, but child support part of any payment between ex-spouses is not income. Welfare assistance, any kind of food stamps or any other public assistance, and then the employer provided adoption assistance. Sometimes a company will provide reimbursement or help for paying the cost of adoption, which can be very expensive, and that is not income if done appropriately, according to the plan.